Hello folks, happy holidays. I got too much to cover in a short video, so I'm going to go fast. Buckle up, here we go. This is my dashboard for silver and gold. Last time we chatted, silver was poking at $70, gold was poking at 4,500. Clearly, they've reached those targets. Gold hung out there for a little bit, resistance there, and then pushed higher yesterday. And then silver obviously had a big day yesterday after jumping above that $70 target. So that's the daily charts. Wow. This was something to watch. 750, $7.50 in a single day on silver. We've had a couple of $2 days, and I think at least one. Yes, we've had at least one $3. I think it was $3.07, $3 day. So anyway, some big moves in silver recently, but 750 just unprecedented. And what is that? 10%, a 10% price move in a single day. So obviously something big happened in silver yesterday, and the question is what? Another question that we can ask is, okay, silver's clearly headed higher, appears to be headed higher. What's the price target? As whether we're investors, speculators, whatever your interest is in the precious metals markets, price targets are obviously of interest. This is my chart for silver. It's a log mode, and so that's a key something to keep in mind is that we are looking at a log chart here. And of course, with these big vertical price movements that silver is making, I believe, my opinion, log chart is appropriate for silver right now. And so anyway, in this chart, my price target at the top of this channel, 150, 170, somewhere in there, and we'll see we'll see what's happening at that point. One of the I find interesting on this particular chart is this action. If we zoom in, this is the recent breakout. We're looking at a monthly chart. We're in the monthly time frame, in case I didn't say that. This push higher. So silver pushes higher, tests this resistance level from below, and it's 47 and change somewhere. Tests the resistance level from below, pushes above it, and then pulls back. And essentially this bar and this bar, this is price retesting the breakout level. And then of course we get the big push, the big bar that we're currently working on. This is the current month, which is about to close. I think we still get a trading day or two in this bar. And so anyway, what my point is with this chart is that this is not just a price spike, poking above resistance and then, going to quickly drop back down below that level. That's not what I'm expecting at all. I believe, again, that price has broken above the resistance level, retested that level for support, and now is continuing its merry way higher. And one of the sayings that technical analysts are taught or learn along the way is that in an uptrend, resistance becomes support. And so that's exactly what we see here, resistance becoming support, which adds credence to the idea that this is a continued price rally, not just a brief poke. I'm at 4 minutes. Let me keep rolling here. So let's specifically focus on what happened yesterday. And so the setup, you can read for yourself the number of factors that have happened prior to Friday. Most significantly is in my opinion, gold meeting its inflation-adjusted price from 1981. And that's using the BLS numbers, which of course are heavily massaged, we'll say. And so gold did this. This is a significant milestone in the evolution of gold's price. Silver has not done that. So I forget what the 3,800, 38, somewhere in there. Obviously under it was under 4,000 when gold achieved that milestone. For silver to do the same thing, here's the calculator. This is let me expand that a little bit. This is the BLS inflation calculator. And so what we do is we type in 4850. That's about, we always talk about $50 silver in 1980. It wasn't 50, it was about 4850. December of 1980, it may have been January of 81, let's not quibble. And then we calculate what is that $48.50 worth today, or the equivalent today. And what we get is this 182.15. And so for silver to match what gold has already done, the price of silver would be 182. And isn't it interesting? This chart gives us target at about 182. Just a coincidence, I'm sure. Bond yields are dropping. This, I don't know, maybe this crossed your radar, maybe it didn't. The Fed restarted quantitative easing on the 10th of this month, December. $40 billion a month. They're going to buy a mix of treasuries and mortgage-backed securities. No end date named. So basically, this is infinite QE. And of course, they're not they're not calling it QE. They had to come up with a new fancy moniker. This time it's reserve management purchases, RMPs. So they're not doing quantitative easing, they're doing reserve management purchases. And of course, one of the follow-on effects from this operation is that their balance sheet will expand. So explain to me how an expanding Fed balance sheet is not quantitative easing. Yeah. Anyway. And then the dollar has been weak, and of course there's reasons why the dollar is weak right now. And then there are two facts that we can point at that happened on Friday, and we can't, these are undisputable facts. Number one, some entity went to the Fed's repo window on Friday morning and borrowed $17 billion, and that's right here. This is the, New York Fed repo operations. There it is. Friday morning, this announcement was at 8:15. So at 8:15 on Friday morning, New York time, somebody borrowed 17 billion, or somebody or some group of somebodies borrowed 17 billion at the Fed's repo window. The repo window is only used by, they're called the GSIBs. It's the globally significant banks. This isn't Fred's Bank in Podunk, Oklahoma. This is JPM in New York going to the Fed's repo. And I'm just using that as an example. I'm not saying that it was JPM on Friday, just an example. But it's a globally significant bank that went to the Fed's repo window Friday morning and borrowed 17 billion. So that's a fact, undisputable. Another fact is on Friday, the price of silver jumped by $7.50. There are analysts currently trying to link those two events. I haven't seen any evidence that links those two events. So it's an assumption, and that's the point that I want to make, is that assuming that those two events are linked is an assumption. And so, okay, let's go down that road with that assumption. I'm at 10 minutes, folks. I'm going to continue. I'll speed it up. We can make some assumptions about Friday. Obviously, one of this isn't an assumption. It is only the GSIBs, and that was the point. Let me reiterate: only the GSIBs use the repo window. Again, it's not Fred's First Bank in Tibbs, Oklahoma. It's JPM and USB, etc. The big banks, the bullion banks. The fact that they went to the repo window tells us that they didn't have adequate liquidity to cover margin calls. Oh, this was an assumption. This is the key assumption, that the activity on Friday morning was related to covering margin calls, and specifically in this case would be margin calls in silver. And so again, I should have listed that. That's the primary assumption, is that somebody was covering margin calls on Friday. And they were unable to meet those margin calls without drawing on the repo window. And furthermore, $17 billion on Friday morning made the difference between fail, not fail. We have to assume that it was, it's critical. It's the Fed calls it the emergency repo window. I mean, emergency is part of its name, and there's some stigma. The GSIBs don't want to be seen using the Fed's repo window because it's a indicator of weakness. And in this case, $17 billion. So $17 billion in freshly printed Benjamins, U.S. $100 bills, made the difference between one or more financial entities failing, essentially, going, belly up. And so when we talk about, if we just focus on the U.S. economy, it's 25 trillion, 30 trillion, whatever the number is. In that size economy, $17 billion makes the difference between fail, not fail. I don't know, that doesn't seem like a lot of money. That seems like a very thinly operated banking system where $17 billion makes a significant difference. Again, we're talking trillions of dollars in the overall system, and $17 billion made a difference Friday morning. Let's see, continuing with assumptions. These are reasonable assumptions that as the price of silver rose, it triggered margin calls during the day and forced buying. The people who are caught short and receive margin calls, they have to close those short positions. How do you close a short position? You buy you buy whatever it is you are short. And so, of course, in this case, it's silver. And so reasonable to assume that there was a lot of forced buying on Friday. And then momentum buyers are going to, they're going to see the the breakout, and they're going to jump on board. We had thin markets because of the holidays, so all of this activity is happening in a thin market. And then this is kind of momentum buyers. Only this is I believe, a non-trivial factor in silver in particular. There's a lot of people who have been hesitant to invest, and now they're saying, oh doo-doo. And basically FOMO. They're jumping on board out of fear of missing out. So, and then in the background, and again, these are facts. These are not assumptions. Now, India, I haven't seen this get a lot of coverage. Perhaps people don't understand its significance. The Indian Central Bank, Asia, Reserve Bank of India, that's RBI, I believe. They added silver as acceptable loan collateral and the pricing mechanism. This is the significance. Within these loans, physical silver will be priced at 1/10 the current price of gold. And so today, what is that? Silver, we'd have 400 and where's gold? I got it for we'd have $453 silver today, based on this pricing mechanism. And so this this loan program starts, I believe it's April of 2026, and so it hasn't kicked into effect, but the RBI has made the announcement, and so in my opinion, this is a pretty significant pricing signal to the silver market. This is basically telling the global silver market that silver, physical silver, is worth at least 1/10 the price of gold. So that's a big factor to be aware of. U.S. added silver to the criticals mineral list. That was September, October, maybe it was November. Anyway, that's a recent change. And then again, recent change. Samsung just went to the current operator of the La Paria mine in Mexico. I'm not sure who currently has control of that mine. Anyway, the contract, as I understand it, Samsung is going to cover the cost of restarting the mine in exchange for all of the mine's output for 2 years. And then, so the background of La Paria is interesting. First Majestic owned that mine for a long time and actually put it on care and maintenance, I think back in 2009, 10, somewhere in there, because it was a marginal, they had better mines. And so they weren't making enough profits at La Paria. They put it on care and maintenance. But it was an operational silver mine with all of the processing plant in place. And so Samsung's going to come in, get it started back up. They'll pretty quickly be back in silver production. And even if it is not a significant amount of silver, Samsung's going to get all of it. And so anyway, that's a background factor. And then this was actually, I believe the announcement was back in 2024, and that Russia is already adding silver to its state reserve fund. Russia and China both, they have multiple sovereign wealth funds. They only talk typically about the sovereign wealth funds that are officially acknowledged, this being one of them clearly. But the fact that they are publicly announcing silver as a new asset class in their official sovereign wealth fund suggests to me that the rest of their wealth funds are also adding silver. And so anyway, that's a significant change. Let's see. Oh, and this is, I've always enjoyed this little poem. He who sells what isn't his'n buys it back or goes to prison. And so that's, I think, relevant to what we are seeing or could be seeing in silver, is that we're seeing a lot of silver that has been sold short via contracts, futures contracts, derivatives, options on futures contracts. I mean, just all kinds of ways that silver has been sold short. And now they got to buy it back or go to prison. Well, and of course, these days you don't really go to prison, but your bank or your trading entity, your hedge fund, whatever it is, fails. It goes into receivership. So let's see, we looked at, so we're back to the Fed, and I'm wrapping up. I'm gonna finish at 20 minutes. That was Friday. Let's expand this. So there's 3 months. And so we can see that the Fed's repo window does get some activity, or has been getting some activity for the last 3 months off and on. And even that Friday's operation at 17 billion, it was not the largest operation in the last 3 months. I mean, that's 50 billion. So essentially 50 billion on October 31st. And then if we zoom out even more, this is kind of interesting. We can see that essentially zero activity for, 4 years, but now something is happening at the end of 2025. So for whatever reason, the repo window is coming back into play here at the end of 2025. And so one last chart. Oh, I went over 20. There we go. I'm playing with charts. This is log mode. This is silver in the monthly time frame. Cup and handle, obviously, with a $625 price target. I'm going to leave you with that, folks. See ya.